Hello ladies and gentlemen, welcome to my channel. If you're new to the channel, here we talk about all things finance, development, and of course, as your host, I am here to educate, to elevate, and to motivate you to become a better you, especially in 2021. So about this time, it's a new year. It's time to make those resolutions. It's time to start doing greater things. And in line with that, I'd like to, of course, highlight the things that you have been doing that have been causing you financial harm, and how you can be able to identify them, and what you can do about it. So thank you for tuning in to this channel. Of course, if you have not subscribed, subscribe, hit the bell icon, like, comment, and share. Your likes are so important because it allows for many other people to be able to see this information. And if it is important to you, it is important for many people to be able to see this information. So thank you. So we're talking about the financial mistakes that we've been doing 2020 going back. So what are these mistakes? One of the mistakes that people are doing is not investing. Guys, it is good to save, but it is better to invest. Why? Because savings indeed is like driving a car in first gear. You are moving, yes, but you cannot move fast enough. You cannot reach your desired financial end and goals fast enough without investing. Again, when you save, you do not take advantage of compound interest that can be able to help you a long way in meeting your financial ends. Again, it's important to note that compound interest is interest over interest that you accrue over time in your investment. And over time, it becomes a significant amount above what you already have personally invested as capital towards your investment. So invest, my friends, invest. The other thing that many people do, a mistake that I have seen, is impulse buying. Kindly stop spending on things on a whim. If you have to, stop, think, evaluate. Do I need it? Don't I have enough of it? Don't buy the latest gadgets or iPhones or whatnot because they have come out. Remember, these guys, when these guys come up with new products, they do not make a complete package that the product will come to solve all your issues. Remember, it also has to have something that has to be improved on so that the next version is better than this version. So if you keep buying and buying, especially when they are coming out, they are very expensive. It is better if you have to get that phone or that gadget, wait a bit, because what usually happens is after the hype has gone down, the prices go down too. So please don't rush after those gadgets and those things on a whim just because they have come out. That is a financial mistake. Another financial mistake that I see is people are not diversifying their investments. They are putting all their investments in one basket. So if you're doing real estate, all that you have is real estate. You only have houses and rental properties. You do not have any other investments. Why is it so bad? Guys, in 2020, the main people who had put all their investments in shares. But because of the coronavirus and the financial situation that followed, shares were going down. People were selling out and trying to survive. They were cashing out their shares. So the value of shares was going down. So if you had 1 million and it received a hit, all the 1 million that you had was all in shares. And it received a hit because of the virus and the financial issues after. Then your investment went down by 300,000. You suffered what we call the risk of not having a diversified investment. Why? Because especially when you have several investments, when one is doing well, the others might not be doing so well. And the one that is doing well takes care of the one that is not doing well. But when you have only one investment, and that investment is not doing well, your overall financial situation is doomed. So please diversify. If you're doing shares, have a portion, have a percentage. Let it go to elsewhere. Determine what is your percentage, what is your portfolio composition. based on the risk that you want to undertake. So have a balanced proposition. What I would advise you is to take at least 5 different investments. That way, if one is performing well, the other ones, if they're not performing well, could be able to take care of each other. So please, that is a financial mistake that you are doing, not diversifying enough. The other thing is people are making the mistake of not having liquid assets. Why is it important to have liquid assets? And liquid assets, I'm not saying cash, but I am saying readily convertible assets. People have so much investment in fixed assets like land and rental properties and houses, personal houses, that you cannot convert into cash to either take advantage of a financial opportunity that has come up or to take care of an emergency. So without sufficient liquid assets in your portfolio, you find that when you have an issue, you end up selling a fixed asset, and to be able to get this cash quickly, you sell at a discounted rate, which is a loss to your to your overall portfolio. So please have a significant, at least 10 to 15% is sufficient in liquid convertible assets like shares, ETFs, and money market funds. Therefore, if you have an issue that comes up, that you have the cash that can, the assets that can be converted quickly to cash to be able to take care of the need or the investment opportunity that has come up. So have some liquid assets. The other thing that I see is with business owners. I find business owners have the mistake of not accounting for their withdrawals. By not separating your financial affairs with the financial affairs of your business, you cannot sufficiently track how your business is doing or how you yourself and your financial situation is faring. You find that there are people who overspend on their own personal things and end up taking withdrawals from the company to be able to fund the exorbitant and unrealistic expenditure. Case in point, a friend was working in a family business, and every now and then in the cash office, family members would stream in asking for cash to buy their own personal things, airtime, wine, going out, this and this and this and that, and no one was accounting for it. The challenge was, because no one was accounting for it, the cash flow of that organization was always affected. The person who was in charge of cash could not sufficiently plan for the cash expenditures, because you cannot really plan for unsolicited withdrawals from members of the family and business owners. So please separate your business and your personal financial affairs. It is a big financial mistake. If you are looking for funding and the person who is providing funding finds that you do not separate your personal and business affairs, that you have mixed up your personal and business affairs, that you cannot clearly define where your business ends and where your personal affairs start, they will not fund your business. It is a big financial mistake that I see with many businesses. The other thing is scams. Please, this is a mistake that I see with people, especially who are very hungry for big income and big return on investments. They are always scammed, because there's always somebody who is willing to tell you a good story on how you can make much more than you are actually making. But the problem is, the person is indeed after your money, not after making your money make money, but they're after making money from you. Please avoid these financial scams. And I have already done a video highlighting on this, and you can be able to see it on my channel. So the other thing that I see is people go out to buy a new car. Please don't buy a new car. Remember that once you buy a new car, and I'm talking about the 0 mileage, the one that you get with the plastic wrapping and everything, 0 mileage car. The reason I'm saying this is, by the time you leave that car sales showroom, by the time it counts 1 on the meter, it has lost 15% of the value. 15% of the value. So if the car was valued at 1 million in the showroom and you take it and step outside the showroom, it immediately falls down in price to 850,000. You have lost 15% immediately. That is a loss. That is a financial mistake. Rather than that, I would suggest buy a second-hand car. Buy one that is at least between 3 years and 5 years. Cars are made to be so good that they can be able to last even beyond 20 years. Again, I myself follow my own advice. I bought a 500 euro car. 500 euro. In fact, I pay more in insurance than I paid for the car. Guys, it has served me. It has gone to many, many places and it has been so reliable. It does what a new car can. So why should I buy one? In fact, I realize there are so many opportunities that you can be able to. If you wanted a new car or the feel of having a new car, why don't you buy a car in the showroom that has been used to shepherd and for test driving by the people in the showroom? It is usually not more than 5,000 kilometers in mileage, and it is around 40% less of the original cost of a new car if you need to have a particularly new car. So those are financial mistakes you need to avoid in 2020. Why should you lose value within a minute? Why? It is lack of wisdom, lack of financial wisdom. The other thing that I see is people taking loans and taking credit cards because they can, and acquiring credit loans from their credit cards because they can. Please, if you have no financial plan for the loans that you're undertaking, please avoid, desist from such loans, because at the end of the day, this is money you have to pay back. And again, if you have not planned for the money that you received in a loan, you're going to spend it poorly and terribly. So avoid taking loans because you can. Take loans because you have a purpose and you have a plan and you have an investment in place. Or at least, in the very least, you're taking care of an emergency that has come up that you had not catered for. But don't take it because you can. I have heard of people who take loans just to be able to revamp their houses, buy new curtains and new furniture and new television sets. That is lack of wisdom. Don't take loans especially for consumption. Don't. Avoid and desist from such ventures. The other thing that I see that people make, financial mistakes that people make, is investing in businesses you do not understand. If you do not understand, if you cannot make head or tail of a business, don't invest in it. Whether it is your friend, whether it is your family members, don't invest in businesses that you cannot understand. In the very least, know what good and what services, what processes are going on in that organization, in that business, with that good, with that service. If you cannot understand, please run away. That is a financial mistake that you are about to make. The other thing I see is people giving loans to friends and family. Please, remember, you are not a qualified loan approval person. You do not know how to give loans, and mark you, your judgment is also clouded by the fact that there are people that you love and you respect. Therefore, you are most likely to make an improper financial decision as you lend this money to your friends. I have seen so many people who have lost friendships and even marriages because of financial loans, because of loans they have lent to their members and they have borrowed from their family members and spouses. Please resist and desist from offering loans. In fact, the only amount of money you can give is money that you are willing to lose, and put it as an expense. Say, I am just giving. It's a social contribution. But don't give loans to your family members, especially if you cannot assess the financial situation. Don't. Handle them as if you would handle any other person and any other business. Please do not resist and desist from such things. My friend, the other thing that I've seen is people have this tendency to buy cheap shares or penny stocks. You buy shares, many of them, but in the cheapest shares. The problem with very cheap shares is because they belong to companies that are unproven, that are doing technologies that are unproven, or small cap companies. They deal with technologies that are unproven. They have not yet commercialized processes. They're still in the testing and trying stage in their processes and products. Major financial players do not yet recognize them and recognize or invest in them. So why should you? A friend of mine invested in a sugar miller because their shares were going for very cheap. Little did they know that the reason they were selling very cheap is because significant investors were dumping shares because the sugar miller was in financial distress. So don't buy the cheapest shares. Do your due diligence. Do look at the return on investment. Look at their history of dividend. Look at their history of financial returns. Chief among them, one thing that people don't look at their sources of income. Are they sources of income that are sustainable? I see some companies sell off assets and claim to be additional income. Please, if you see a company has sold assets last year, this year, and the year that is coming, and it has disclosed as an income, it could be financial manipulation to be able to show a profit while in fact their business processes are making losses. Please avoid this. So my friends, those are some of the financial mistakes that you should avoid in 2021. Thank you for coming to my channel. If you have not subscribed to this channel, kindly subscribe, like, share, and comment. Please remember that your like goes a long way in sharing this information to many other people. So let us help each other, help your friends, that they may not make these financial mistakes in 2021. So thank you and enjoy.